Feds improve and maintain inflation gamble in spotlight as Jackson Hole awaits Powell. Jackson Hole, YO. If enhance and keep sounds like a poker strategy, which can in fact sum up the Allen approach to preventing inflation that Federal Reserve Chair Jerome Powell is anticipated to lay out in a fantastically anticipated speech to the Jackson Hole Imperative Banking Conference on Friday. As debate raged in recent weeks approximately whether or not the U.S. economy was bordering on recession and how that would throw the Fed off its march to higher hobby costs, Powell's colleagues leaned tough at the idea that the U.S. primary financial institution's benchmark in a single-day hobby price could now not simply preserve growing but stay at a high degree till inflation again to the Fed's 2% goal. I'm truly going to attempt to be as resolute as possible, once we get to a degree that I suppose is the appropriate degree, to definitely continue to be there and to purposefully analyze and investigate how our policies are flowing through the economic system, Atlanta Fed President Raphael Bostic told the Wall Street Journal this week. Some weakening is to be predicted inside the economic system, he persisted, and it will be truly important that we withstand the temptation to be too reactionary, and certainly ensure that we get inflation well on its manner to 2% before we take any steps to increase accommodation in our coverage stance. Translation: don't count on the Fed to rescue the economic system or the unemployed from a modest downturn. The feedback from Bostic and different Fed officials mark a subtle but vital shift in emphasis in how the vital financial institution talks approximately what it is doing. One Powell can also properly emphasize whilst he is taking the podium at a Mountain Lodge outside Jackson, Wyoming at 10 a.m. Eastern Daylight Saving Time, 1400 GMT. In current weeks, Fed officers have shifted from warding off the R phrase, announcing their wish became to keep away from a recession, to downplaying the significance of one, in particular in the context of the worst outbreak of inflation in 40 years. Controlling the growth in rate pressures remains their high attention. I don't see the risk of a sustained or deep recession to be very excessive, Philadelphia Fed President Patrick Harker stated in an interview with CNBC on Thursday. The language matches expectancies popping out of the United Kingdom and other elements of Europe that significant banks may additionally need to retain elevating interest fees even within the face of a downturn, rather than provide help in the form of lower borrowing costs that might increase the financial system and employment. As critical bankers have attempted to keep away from a trade-off among inflation and jobs, a sacrifice they wrongly made in recent low inflation years out of place fear of rising expenses, they well know they may have no choice in the present-day environment. The ache of a modest recession might be extreme for individuals who lose their jobs. The expenses of runaway inflation, in the Fed's view, would be tons higher and include even worse risks for the destiny. Graphic: Fed's evolving game plan, raise and keep, return to conventional policy. The challenge now's to promote that view to the general public. The hard work market is very tight. I suspect to get a few loosening in that exertions market you may see better unemployment as the Fed cools the economic system, Kansas City Fed President Esther George told CNBC on Thursday. The Fed's goal lending charge, presently set in various between 2.25% and 2.50%, might also need to upward push above 4.00%, George mentioned, and, we will ought to keep, for a while as inflation falls. There isn't any guarantee how lengthy that can take or what fee may be required in terms of lost jobs and output. But it might be an epochal moment for the Fed. The U.S. federal price range charge was remaining above 2.50% in 2008, when the relevant bank began slashing it in response to the fast accelerating international monetary crisis. Rates have no longer been held regular at a level that excessive because 20,062,007, while a credit-fueled housing bubble commenced to fall apart. The final results lower back then became awful, a long and scarring recession, fueled via a banking device disintegrate, and with a painfully gradual healing in its wake. The hope this time is if a recession happens any time quickly it'll be shallow, held in test with the aid of the reality that the economic system is better buffered and now not as liable to the problems which could flip a modest dip into something worse.